This is by far the best technical analysis video that you'll ever see in 2023. And there's a reason behind why is it that I actually named this video like this. Look, I've been looking at strategies like forever in regards to Forex trading in YouTube. And one of the common scenarios that I've been able to find is that they actually divide the same strategy on different videos. And I'm actually guilty of making the exact same mistake. So you see a video, but then you have questions in regards to the same strategy, and then you jump into video on another one, and at the end you end up confused. So I decided to make a slightly longer video where I'm going to explain everything in regards to a simple strategy for technical analysis that you can use for Forex trading. So hopefully you enjoy it. But that's not it for this video. At the end or somewhere in the middle of the video, I'm gonna tell you exactly a secret word that you actually need to put in the comment section below. And once you actually do that, you will be given a special gift in the comment section. So as soon as you actually hear the moment when I tell you the secret word that you need to put in the comment section below, then I'll go ahead and reply to that comment with a special gift for you as a trader. So with that being said, let's go ahead and dive right into the content. The first thing that I want to give you in this specific video is a warning, okay? Just the fact that I'm actually showing you a new strategy, that doesn't necessarily mean that this is the only thing that you need and you're gonna become rich. There's risk involved when it comes to Forex trading, and there's potential risk to actually lose everything on your balance. So in order to avoid this, obviously you need to take it seriously, and more importantly, you need to follow my advice when it comes to risk, money management, and so on. So here, I'm gonna teach you exactly how the movement of the market actually works, but I'm not telling you that with this you're gonna become rich in no time. Okay, so hopefully that makes sense. Now let's go ahead and dive right into the content. Okay, so this video is actually gonna have a few like phases and sections and stuff. And the first one that I really want to make sure it's clear is actually understanding the markets. Look, if you are very new at Forex trading and you have no idea as to what is Forex, how is it that you see charts online, and how is it that, I don't know, the system works, then stay up until this part of this video. If you already know what the markets are, you know what Forex trading is, you know how currency pairs actually work, then you can jump into the next section. So Forex market is basically a foreign exchange. That's basically what it stands for. And it's pretty much managing the pricing between one currency and another one. Most of the times is actually a country's currency against another one. For instance, we have the euro, we have the US dollar, we have the Canadian dollar, we have the Japanese yen, and these are like the acronyms of these actual currencies. So what is it that Forex market actually does? It actually measures the euro against the US dollar and the Canadian dollar against the JPY, or it could be the Canadian dollar against the US dollar or the euro against the Japanese yen, and so on. So basically, that's what Forex markets actually are. So if you actually go into any platform when it comes to Forex, it could be TradingView, it could be MetaTrader 4, or it doesn't matter what platform you actually go to, you can actually find something like this. I always use the euro against the US dollar because that's the biggest pair. I don't know what I did here. Hold on. It's like the biggest pair that you will able to find. So this is what it looks like, okay? Now, when you actually understand that there's a price between a euro against dollar, meaning how many dollars, how many of these actually make one of the euro? 1 euro equals to how many US dollars? So most of the times you're gonna see, well, the euro, at least before 2022, it was more than the dollar, then it went down, and now it's pretty much equal. But at some point we were looking at, for instance, 1 euro is 1.10039, whatever. You're gonna see this pricing in this section right here. This is where the pricing actually looks like. We're gonna jump into the computer and get more details in regards to it, but this is like an overview result. So you're gonna see charts. just like this. Jumps, we have more jumps and drops and so on. This is the trading market. So the trading market basically will give you the price. For instance, here was 2, here was 1.1, here was 1.2, 1.3, and so on. So the price is actually either jumping or dropping, or the price of the euro is jumping or dropping against the US dollar. So how many dollars is per euro? Right here is 1. Then is 1.1. If it jumps more, like right here is 1.3. You know what I mean? So that is the trading market. So when we are trading against the US, or when we're trading euro against the US or euro against the British pound, it doesn't matter. This is how the market actually works. So hopefully that actually makes sense. Now we can talk about the trends, and this is a super important topic. A trend basically determines where the price of the asset is the combination of the two currencies, or the price of the pair is actually going. For instance, same thing. We have right here the euro against the US dollar, euro against the US dollar. So what you see is that the price is actually doing this, stays there, and it keeps on jumping, like this. What does this tell you? This is telling you that the price is going up. Therefore, that is an uptrend. And if the opposite is happening, then it is a downtrend. Okay? Simple as that. But I want to be more technical in regards to this specific part of the video. Let's say that the price, and this is one of the most common movements of the price of the market. The price actually does this. There is something called support, and there is something called resistance. Okay, the support is the lowest point where the price actually goes and touches and then it starts jumping, just like right here, and then it starts jumping. That is a support. This is a resistance. It's when the price actually touches this level and then drops. That is a resistance level. But what happens when we have an uptrend? When we have an uptrend, this resistance most of the times gets broken, which means the price continues to go in the opposite direction. And now this, which was a support, resistance, now becomes a support line. So the price can actually return to this level, but now since it's a support, it's gonna keep on jumping. And this can happen many times in the market, just like this. And this is considered an uptrend, okay? How would we identify a downtrend? Well, it's going to be the exact same thing, but with different levels. Obviously, I'm drawing a perfect chart. It doesn't always happen like this, but this is an uptrend. Now, this was a support line, was broken. It became a resistance. Then this one was broken. It became a resistance. Then this one was broken, resistance, and resistance. So whenever you're actually trading with a trend, what you need to look for, let's say this is an uptrend, right? So the price is actually going to this level. You identify what is the support line. So you don't actually trade, oh, so it's going to drop and break the support line. No, you actually trade saying that once the price actually touches this area, then it's going to become a buy position. So this is what happens. Does that make sense? So when you actually are able to identify the trending, you're able to identify where to trade. You're not saying, hey, I know the trend. I'm just gonna, if it's an uptrend, I'm just gonna buy whatever amount of lots right now and just gonna continue going up. No, the trend will tell you what direction you should trade. If it's an uptrend, you're gonna trade with a buy position. If it's a downtrend, you're gonna actually trade with short or sell positions. Okay, now let's go ahead and jump into the computer, and then I'm gonna tell you exactly how is it that you're supposed to use the actual charts in order to do this. Now we jump into the more technical part, and we're gonna understand what indicators we actually need if we actually want to go ahead and start using this specific strategy. So one of the most important indicators that you're gonna find is going to be the 50 EMA. That's the one that I use. You need to go to indicators, you type in moving average, and then you're gonna see moving average exponential. So once you actually add it, there's gonna be a line actually added in this area. All you need to do is go into this setting button right here, and then go to inputs and change it to 50. Then you can use whatever style is it that you prefer. I leave it as blue. It's just pretty much like an indication of it. Now, there are some other indicators that you can actually use in order to determine what's going on, like the 200 EMA, but it actually gives you a bigger picture of what is a good downtrend or uptrend. You can use any of them. In the end, I'm gonna give you like small differences. Well, right now, let me just go ahead and give you a few differences. The 50 EMA will actually tell you the immediate trend, which means right here, this basically means that the price of the asset might be broken. But on the 200 EMA, it basically doesn't tell you that. It just allows you to actually understand what is the bigger trend. You can use the 50 or you can use the 200. You're gonna realize that the 50 gets touched many more times, but the 200 get actually touched a lot less. Now, I'm using the 4-hour candlesticks because that's where, look, the bigger the time frame of the candlestick, the more respected will be the actual strategies. So I'm using 4-hour candles, and sometimes when I place my positions, I also go with 4-hour candles. Right now I have a couple of positions placed on Bitcoin based on this strategy. So yeah, that's what I'm going to actually be using. You should use the exact same thing. So once you actually jump into it, take a look at it. This is a downtrend, and let's go ahead and identify the trend first. Whenever the 200 EMA is actually above the candlesticks, that basically means is a downtrend, just like it's happening right here. And whenever the 200 EMA is actually below, like it's happening in this specific area or in this specific area, that basically means that is an uptrend. So 200 moving average above is downtrend, and 200 below is a downtrend. Okay, now how is it that we're gonna find those entry points that we need? First of all, we actually need to identify what is a support line. So as you can see, I actually draw this order block in this area, but I can easily draw a line right here by identifying that this area was respected many times. You see, it was respected right here and this area, and then again, then it broke, then it was respected here and here. So it's likely that this is a strong support line, especially since we're looking at it in a 4-hour candle. So what we want right here is not a buy position. No, we're looking the breakout of this area so that we can actually have an entry point for a sell position. Why? Because it's a downtrend. We're not gonna trade against the trend, okay? So let's go ahead and find out exactly what would be a good entry point for this trade. So we're gonna see exactly what's gonna be happening right now. You see that it almost respected that section one more time. It even respected it one more time. But take a look at this. Now we got broken. So that basically means that I can enter a short position. Why is it that I have this little area right here? Just to explain it to you. You're gonna realize that there is a wick. This wick is the one that I use as my trading zone. So I'm gonna enter my position, a short position right here at the beginning of this zone, and then I'm gonna actually go slightly above the order block level so that I can actually be safe. So you can see right now that I have 18 pips in loss. How is it that I'm gonna choose my take profit? I'm gonna look at the lowest level that has been reached by the exact same pair, which is the lowest low, and that's what I'm gonna go with. Now, this obviously it's depending on how you're gonna trade. A lot of people would prefer to go 1-1. I don't recommend it. But if you go 1-3, and when it comes to the risk-reward ratio, you're good to go. I'm gonna explain to you the risk-reward ratio in just a little bit so that you fully understand. And I'm also going to tell you exactly how do we actually use the trailing stop. So this is how you can actually set the right stop loss and the right take profit. This is the entry point we already identifying, and you need to actually find some sort of trading zone. Just right here. So I'm just gonna go slightly above it. Why? Because the price of this specific asset might even go and touch this area because that's considered still part of the new resistance line. So I go slightly above. Remember to also check your spread, and then I actually wait for the price to actually start dropping. Okay? So let's see if this trade gets actually activated. And by the way, the take profit, two options. 3-1 or to the actual lowest point of or the lowest that has happened in the exact same pair. Remember, this is a downtrend, so I would say, hey, at least the price is gonna touch again into this lower low. So that's where I put it. Obviously, in the meantime, I'm gonna move my prices, break even or slight profit. I'm gonna close partials and stuff. So right here, let's go ahead and see exactly what happened with this position. And you see that the price is dropping. Sometimes it might just go away, but take a look at it. Right now, it just activated. It's just activated in this section. And then let's see what's gonna happen. It drops, it drops. By this point, I should have moved my stop loss to like this area right here, somewhere here, so that I'm trading risk-free, okay? Or you can close partials in this section because you're 2-to-1 or something like that. Let me just go ahead and see how you would be doing in this area. You would be around 1.68. You could actually close partials in that section. So then the price is gonna drop more and boom, the take profit was actually hit. You can realize that the drawdown or the actual space and the loss that we had with this trade is very minimum, very minimum. Why? And look, I'm just gonna put this in the middle of the notes that I have in regards to this video so that you fully understand how is it that you're supposed to trade Forex. There's institutional trading and there's retail trading. You can trade as an institution because institutions trade with millions of dollars. And if you only rely on trading as a retail trader, then you're gonna just mess up by just following, hey, the crossover of the moving averages and stuff. It might work a little bit, but the point of being a Forex trader is to be completely profitable. So you need to make as a combination between, hey, this is how institutional trading works and this is how retail traders work. So what you do is you identify by using technical analysis where a lot of orders will be placed at once. So for instance, you know that in here, not many sell orders are actually placed, but in this very little line, it's very likely that many people, we're talking about thousands and thousands of people are placing pending orders here for a sell because we're all thinking alike. And the more short orders that we have, the more the price is gonna push down. It's just like Bitcoin. The more people buy Bitcoin, the more the prices push up. So this is exactly the same thing. So you need to actually think as to, hey, where are institutions and retail traders would place their orders according to what we know. And this is a perfect example of it, okay? So now we see that we actually won this trade. It wasn't really that hard. So we actually try to find another example that I actually found somewhere here. There you go. Take a look at this specific example. There's a strong support level in here. Why strong? Because of the push of the candle is very big, but then it started pushing down, pushing up. And here it got respected not once, but twice. Well, actually 1, 2, and 3 times. So 3 times it has been respected. Why is it that we wait? We don't enter for a buy position. We wait for a breakout in order to enter a sell position, okay? So what is it that we do? We wait for the breakout, then boom, it happened right now. Once it happens, which means the candlestick closes below that breakout level and the next one doesn't touch the level one more time, it basically means that we are in a position for a sell. So we enter at the level. Why is it that I have this little area right there? Because I see that the candle, this wick is too much to actually take as a level. But this little one, I do believe is the one. So what I'm going to do is that I actually put my entry slightly like in the middle of this wick, and my stop loss is going to be slightly above the actual area of trading. Now, how do I know what is going to be my stop loss if I don't have a lower low? Well, in this scenario, what I would do is actually, I'm going to go 1, 2, 3. And that's where I put my pending order at. And if the price starts to go more down and it ends up giving me a lower low, oh shoot, hold on. I'm gonna modify my stop loss, my take profit, okay? For instance, right now, it keeps on giving me lower lows. It keeps on giving me, I still have my pending order. This is a lower low. So now my trade is actually 4.43, okay? If it gives me more, I'm gonna play some more. And there you go. Now the trade got activated. I'm not even sure why the chart didn't activate it, but take a look. This is a 4-hour trade. It touched the level right here. It literally almost didn't even go higher than this. And boom, the same candlestick touched the take profit level at 443. This is a powerful entry, okay? Now, I know it sounds complicated and I know it might even sound confusing, but the point of this specific strategy is to actually master the sniper entries, okay? So hopefully that makes sense. Now, why is it that I mentioned that the risk reward is so important? A lot of people would actually think that pips is the most important thing. For instance, right here, they would say, hey, I made 106 pips in profit. That's fine. But what happens if your take profit was 100 pips as well, 108 pips? This is a 1-to-1 risk reward ratio trade. What happens is that if you risk $100 in the stop loss or 1%, whatever, you make $100 or 1% in the profit. But if you actually enter analyzing the real stop loss level that you can actually choose, not just by being afraid, oh my God, I'm just gonna choose a high stop loss so that I don't actually lose. That's not the point of trading. You need to understand exactly what could happen. If the stop loss gets hit right here, probably my pending orders, there were not a lot of pending orders in this specific trade, so that's the reason why we had a loss. But I mean, it's part of the game, right? But just put in a huge stop loss just to avoid risk that's not how it is. But if you actually win the exact same trade with the 20 pips that I put and 106 pips, that's a 5.17, which means that you risk $100 and you make $500, or you risk 1% and you made 5% in return. Does that make sense? That is the importance of risk reward ratio when it comes to Forex. And now these couple of more questions are in regards to how much you should invest and a special advice that I wanted to give you. But if you waited up until this part of this video, I do want to tell you the free or the special word that you need to put in the comment section below, and only the people who actually put this word or this phrase in the comment section below, then you guys will be able to actually receive a free gift. I'm gonna reply to your comment and send you a free gift if you're a Forex trader. So you need to type in the comments, hashtag BLW is back. Just like this, hashtag BLW space is back. Hashtag BLW is back, and you will receive a special gift in the comment section. So go ahead and put it right now. So look, how much is it that you should trade with? It really depends on how is it that you're gonna be trading. If you're gonna be trading with your real trading account, it doesn't matter what balance you have, then you probably can risk slightly more per trade, such as 1%, sometimes even 2%. It's really up to you. But the recommended is 0.5%. Okay, that way you risk very little, and you profitability obviously is going to be less as well, but you're like taking less risks. Now, if you're going to be trading with a funded account, you cannot trade with 2% or 1% of your balance per trade, and not even with 0.5%. I would even say that if you're not an expert trader or anything, you should go with 0.25%, just so that you have around 10, 20 trades or something like that lost in order to actually lose your funded account. But if you're going to be trading with your real account, then you can risk a little more because nobody's going to take your account away from you. But if you're trading with a funded account, then no more than 0.25%. Now, if you don't know exactly how to manage your percentages and stuff like that, I'm gonna make a more detailed video in case you're interested in, but just put it in the comment section below and say, hey, Chris, can you explain how we manage or how we set up the percentages on MetaTrader 4, TradingView, or CTrader, whatever platform you're using. And then I'm gonna help you out by teaching you exactly how is it that I do it and how you can do it as well. And the last tip that I wanna give you is that you should write your own trading plan, your goal and your plan. Why is this so important? Look, if you're just gonna be trading blindly, it doesn't matter if this strategy is a killer or if this strategy doesn't work, you're still gonna lose the money. So the most important thing is that you actually have a goal in mind that you can start using. Just, I don't know, in Amazon, you can find for like 10 bucks a, what is this called? Whiteboard. You can buy some markers and then write your goal physically. And then have your plan. Your goal is where you what you want to achieve, and your plan is how you're going to achieve it. So if your plan is to actually make $10,000 and you have a $10,000 account, then you actually put the goal as a $10,000 and you write the plan as to how you're gonna do it. Hey, I'm gonna be trading no more, because you don't know how many trades you can actually place during the one week or something like that. So write a weekly plan and say, hey, I'm not gonna place more than 5 trades this week. And my target is actually to make at least 2%, for instance, right? So once you actually get to the 2%, then you can stop for the week and continue the next week and so on, but follow your plan. So that if you're organized, then trust me, it's gonna be way easier to control your emotions than if you're just trading blindly. So hopefully that makes sense as well. Hey, so hopefully you enjoyed the content of this video. If you did, don't forget to smash the like button to support this YouTube channel. But more importantly, if you have any questions or comments to share, you can always use the comment section below and my team will be happy to reply to you. Thank you very much for watching this video, and I'll see you on the next one.